When we think of banking today, we think of New York, London, and Shanghai. We think of billion-dollar bonuses, hedge funds, and high-speed trading. Wall Street, the city, the suits, and the scandals. But the real origin of modern finance, the roots of the global banking system, lie somewhere very different. Not in a skyscraper, but in a stone-walled medieval city nestled in the hills of Tuscany. Siena, Italy. It's here in 1472, 20 years before Columbus set sail, that the world's oldest bank was born. Banca Monte dei Paschi di Siena wasn't just old. It was a revolution in how people thought about money. Founded as a Monte di Pietà, a charitable lending institution, its goal was to offer low-interest loans to those who needed them most, the working poor. At the time, lending money with interest was often seen as sinful. But the people of Siena weren't trying to exploit the poor, they were trying to protect them. From loan sharks, from debt slavery, from instability. It was a bold idea, that money could be moral, that a bank could be both profitable and good for society. And they backed this idea with real assets. The name Monte dei Paschi comes from the Statuto dei Paschi, a law passed in 1419 that regulated public grazing lands in the Maremma region of southern Tuscany. These pastures, or pasci, were pledged as collateral. In other words, the Republic of Siena used grass to guarantee cash. It's one of the earliest examples of publicly backed credit, an early fusion of government policy and financial innovation. And it worked. Over the next few centuries, Monte dei Paschi grew from a local institution into a financial cornerstone. When Siena fell under the rule of the Grand Duchy of Tuscany in 1624, the bank adapted, its deposits guaranteed by the duchy's state-owned lands. That model, public support with commercial function, allowed it to weather storms that destroyed other banks. Through Renaissance wars, Enlightenment upheaval, Napoleonic occupation, and Italian unification, MPS endured. While empires rose and fell, this bank kept doing what it was built to do: lend, invest, and grow. The 20th century, from local giant to national player. By the early 1900s, Monte dei Paschi was a national institution. It pioneered new products like Italy's first modern mortgage loans and expanded its services across the country. For much of the century, it was owned by the state, making it both a financial player and a political tool. Conservative, slow-moving, but safe, it stayed out of the speculative excesses that brought down riskier banks, and that caution became its brand. But everything changed in the 1990s. The 1990s, from tradition to ambition. In 1995, Monte dei Paschi underwent a massive transformation. The bank was split into two entities. Banca Monte dei Paschi di Siena s.p.a, a for-profit corporation, and Fondazione Monte dei Paschi, a charitable foundation that retained a majority of the shares. It was a modernization move, part of a broader wave of liberalization across Europe. Banks were becoming businesses, and tradition was starting to look like a weakness. By 1999, MPS was listed on the Italian Stock Exchange. And with its newfound freedom, it chased growth. Hard. The 2000s, overreach and overconfidence. Monte dei Paschi wanted to compete with the big boys. It expanded rapidly, acquiring regional banks, launching consumer credit and insurance arms, and building one of the largest branch networks in Italy. From the outside, MPS looked unstoppable. But under the surface, things were getting risky. Fast. The crown jewel of this expansion, and the bank's greatest mistake, came in 2007. That year, MPS bought Banca Antonveneta from Santander for €9 billion, paid in cash, without doing due diligence. It was a staggering, reckless move. Antonveneta was already struggling, but MPS paid top price, driven by fear of missing out and a hunger for status. And worse, the deal was done just as the global financial crisis began to unravel. 2008 to 2012. The storm breaks. When the crisis hit, Monte dei Paschi was over-leveraged, undercapitalized, and sitting on a bomb. To hide the extent of the losses, executives entered into complex derivative deals with Deutsche Bank and Nomura, codenamed Santorini and Alexandria. These were designed to conceal nearly €2 billion in losses, pushing red ink off the books and buying time. It was accounting alchemy, legal gray zones, financial smoke and mirrors. And for a while, it worked. But by 2012, the lies caught up. A new board uncovered the derivatives. The scandal broke. And suddenly, the oldest bank in the world was on the brink of collapse. 2013, crisis and bailout. In early 2013, with public outrage rising and the Eurozone already wobbling, the Italian government stepped in with a €3.9 billion bailout. The chairman resigned. Investigations began. The European Central Bank, Italy's market regulators, and prosecutors launched probes into the deals. Suddenly, Monte dei Paschi wasn't just a bank, it was a crime scene. But the worst was still to come. 2014 to 2022, the long road down. The next decade was a blur of bad headlines. Monte dei Paschi failed multiple stress tests. It carried tens of billions in bad loans. It burned through capital increases and laid off thousands of workers. By 2016, the bank was in such dire straits that it had to be nationalized again. Italy became the majority shareholder, not because it wanted to, but because no one else would touch it. Lawsuits piled up. Criminal trials dragged on. In 2019, 13 former executives and bankers were convicted for their roles in the derivatives cover-up. But then, in 2022, in one of the most stunning legal reversals in modern Italian finance, Italy's highest court threw out the convictions. The defendants were cleared. The scandal officially disappeared. But the damage to trust, to reputation, to the bank itself had already been done. 2023, the unexpected comeback. Then, almost out of nowhere, Monte dei Paschi did the impossible. In 2023, the bank posted a €2 billion profit, its best result in the modern era. For the first time in more than a decade, it paid out dividends. Analysts were stunned. Investors returned. Confidence flickered back to life. The government, still the majority shareholder, began selling down its stake. By late 2024, the state's share had dropped below 12%, putting the bank on track for full privatization. Today, a survivor, not a relic. Monte dei Paschi di Siena isn't just the oldest bank still operating. It's a living, breathing monument to survival. It has endured the Black Death, the fall of the Republic, Napoleon, Mussolini, the Euro crisis, and its own self-inflicted disasters. It's proof that institutions, like people, can be both noble and flawed, that even the oldest structures can teeter and still stand. Today, MPS is a smaller, leaner, more focused bank. It's not chasing global domination. It's rebuilding trust. Slowly, carefully, legacy. Monte dei Paschi's story is not just about banking. It's about time, about power, about the tension between history and ambition. It shows how a single institution can survive for over 5 centuries and still nearly collapse from a single bad deal. It's a cautionary tale, a symbol of resilience, and a reminder that even the oldest institutions are only ever one crisis away from disappearing. That's what makes it the most fascinating bank in the world. Not just because it's old, but because it's still here. Thanks for watching. Please comment and subscribe if you enjoyed.